This video is all about a trade plan. What is it? A trade plan is a document designed to help you get ready for the trading session, understand your objective, and execute when the markets are running hot. How it works. It gives you critical reminders to enhance your mindset and understanding of the markets, along with the plan of what you expect the market to do when given time to plan out your analysis. Why it is important. Novice traders often look back at analysis and say, oh, I should have done this here. Suffering from 2020 hindsight, they don't realize that had they have written their analysis and simply followed the plan, it would have taken the pressure off deciding on trades in the moment and also have a detailed backing of why they are placing a position into the market. As you enter the arena that is the market, just like an Olympian hits center stage or your favorite artist drops that first beat on stage, you are in a position and ready for what the market might throw at you. You can create your own, or you can download our free trade planner, and we're going to break down what's included in the free trade planner and how it looks so that it'll help you plan your own or simply download ours. It starts off with pre-market preparation. Your trading day starts effectively the night before or in the preparation that you do every single day. So body and mind. Make sure you've done some physical activity for the day, had a healthy diet, getting enough protein, fiber and vitamins. Chewing gum just before and during the trading session may help to stimulate your brain. 1 hour before the trading session, we want to recite the rules, phrases and quotes. This is to get our mind in the right space so that we can critically assess the market when it's moving erratically. Assess market and write down analysis. So 1 hour before you expect to do anything, you want to write down and plan out exactly what you think the market should do based on the analysis that you have in front of you right now. This will eliminate any 2020 hindsight after the fact, and you can rely on what you've actually written down and say, if you deviate from this written plan, but your written plan is right, you know that your analysis is acceptable to follow and you've made an error in the heat of the moment. This can help you in future build trust in what you actually write down and analyze. It's also important to review upcoming news events on the economic calendar, check the day, so Monday to Friday, and also date-specific elements such as last day of the month, first day of the month, or anything in particular that does affect the market based on that specific date. 30 minutes prior to the trading session, it would be ideal to meditate and picture the desired outcome based on your written analysis, feeling the outcome with your heart-mind connection. This will help you to perceive the desired result and trust in your analysis a little more. We've got a list of phrases here, such as I can only react to the market. True successful trading is a function of profitability over a series of trades across months and years. No one trade should make or break the account. Stick to the trade plan. Traders are paid better when they wait for the right price. Focus on being able to come back and play tomorrow. Egos will be crushed by the market. Stay humble. Ensure appropriate risks are accepted before entering the trade. Big wins are found only by holding your ground most of the time and staying in the game for the moment that counts. I am a successful trader. I earn plenty of money from trading every year, and there is no need to rush any trades today. These phrases should help to recalibrate your mind, to respect the market, keep your risk in check, and focus on what's important, which is coming back and being able to trade tomorrow. If the market does present an event where you can make excellent money, that will be a bonus, but the most important thing is respecting the market and being able to keep your risk in check so that you can continue to make good decisions long into the future with your trading account. Page 2 of the trade plan includes the date, which you could write down, and you could print multiple of these off or run a PDF editor and save that each day into a specific folder so that you've got record. So you've got pre-market notes. How are you feeling? This would include things like if you're feeling unwell, sleepy, unfocused, stressed, or if you're feeling positive, motivated, and excited for the trading session. Understanding your feelings and reactions into the actual market and tying those into the actual result will help you identify any situations that you should avoid for your trading, and also identify situations that you want to aim for. So if you're feeling motivated, for example, and your results are good, and that's a continuous pattern, it's ideal that you understand that and then be able to get into a motivated state so that you can effectively enhance the results of your trading. Is there anything that might impact your ability to trade this session? So this is where you might write down something. For example, people are calling you, you're waiting for a call, you've got work to do during the actual open time of the market or the trading session, you're waiting on something, perhaps you've had a headache and you might have had some Panadol. It's important to track all of these things. Perhaps you've eaten well or you've eaten not so well. It's important to understand the impacts of food. If you're perhaps a little bit dehydrated, all of these things could start to build a picture over several years, and you could identify that, say, when you haven't had enough water for the day, what's the actual result in your trading? Is there a pattern there that you could impact and influence to improve your actual result as a trader? And then finally, we get into the trade plan, which is the expectation of the actual market. So you would write down the analysis that you've found, and based on that analysis, do you expect the market to go long or short? What stop losses would you feel are safe from getting hit from the actual market? If it does move against you, how far is it likely to move before you would expect it to just simply close because it no longer fits your plan? And how far is it likely to go towards your target? So expectation is basically writing down your full analysis before the market even opens, and then you come back after the trading session, show the result, so what actually happened compared to your expectation. For example, sometimes if you trade different to your expectation, but the expectation is right, this is going to further give credibility to your analysis and allow you to further trust what you write down before the market even opens. So it's important to write down the expectation versus what you actually did and the result of the market. And then how to improve would outline things like risk management. Did you follow the plan? Did you stay in line with your written analysis? What actually happened? And then how do you improve that? So over on the website, there's a link in the description below. You can access this trade plan for free, but it does also detail each section where you would write things such as how to improve. It outlines the concepts that would be important to take note on. So we're over here on the website, and it details a range of information. So here's the form that you would fill out to actually get access, and that will be emailed to you as a PDF. Here's a few things that you might write in the how to improve section. So for example, did you close the trade too early? Did you overtrade? So taking multiple trades where you perhaps shouldn't have. Entered into the market too early or too late. Used the wrong volume or lots on the position, so you didn't calculate your risk correctly. Stops or targets placed in the wrong position compared to the written plan. Panicked and exited trades. Moved stops further out and took bigger losses to avoid getting stopped out, for example, and then it keeps going against you. All of these different situations. This page will not only help you obviously get access to the PDF, but it will explain in more detail what each section should include and how it might actually help you become a better trader in the long term.